Welcome to this Coeur housing market update. It's November 2023. I'm going to bring you all the facts you need to know about the housing market, both nationally and locally, without any of the nonsense fluff. My name's Phil Wells. I'm a North Idaho real estate agent that takes the time to keep up to date with the market, and I want you to be as informed as possible too. In this video, we're going to start by getting a national picture of what's been happening. We'll look at pending home sales, we'll look at mortgage rates as well as mortgage application rates and median home prices. We'll then move on and compare and contrast what's been happening nationally to what's happening here locally. Just a quick note, there will be no market update in December because I'll be out the country on vacation. So let's get into it. Looking first at the most recent national pending home sales we have, which detail pending home sales from September. Contract signings were up 1.1% on a month-over-month basis in September. Year-over-year contract signings declined 11%. Which represents 22 consecutive months of year-over-year sales declines. That year-over-year figure, while it's not a positive number, obviously, it excites me. That's the lowest figure I've seen for a long time when it comes to year-over-year pending home sales declines. So it begs the question, is that trend beginning to level out? Well, here's what the National Association of Realtors chief economist had to say about September's pending home sales. Despite the slight gain, pending contracts remain at historically low levels due to the highest mortgage rates in 20 years. Furthermore, inventory remains tight, which hinders sales but keeps home prices elevated. He added, because of home builders' ability to create more inventory, new home sales could be higher this year despite increasing mortgage rates. This underscores the importance of increased inventory in helping the overall housing market get moving. So we need more homes to sell. That's especially true in this high interest rate environment because people are not willingly choosing to trade in their 3% mortgage for an 8% mortgage unless they have a really compelling reason to move. So we need that new construction to fill that gap until interest rates come back down. I maintain though that the desire to buy a home hasn't gone away, just the ability to do so. When these rates do eventually come back down, I foresee a lot of pent-up demand being released all at once. Let's move on and look at mortgage rates. Obviously, we know mortgage rates are high, but how high are they? Sticking with September for a second so we can really analyze that period in time. Mortgage rates at the start of September were at 7.08%, and by the end of September, they were at 7.44%. Rates have since broken through the 8% barrier, peaking at 8.03%, but have since fallen to where they are today at 7.41%. Those are particularly high mortgage rates and will continue to dampen buyer demand so long as they continue. But will we look back at where we are right now as the moment the market began to turn around? The Fed has signaled that it's finally done raising interest rates. It's far too early to tell, but I'm cautiously optimistic. Let's stick with mortgages for a second and look at mortgage application rates. This is exactly what it sounds like. I want to know how many people out there are actually applying for mortgages. These figures are reported weekly, so we're able to get a really up-to-date impression of what's been happening in the market. I'm looking for some kind of correlation between mortgage rates and mortgage application rates. That tells me that the basics of supply and demand are still working even in this market, and there's no strange resistance happening in the market. As you would imagine, as mortgage rates rose above 8%, mortgage applications fell, and they actually fell to their lowest levels recorded since 1995. So we're at a multi-generation low when it comes to mortgage application rates. That speaks to very, very low buyer demand in the current market. But as I said before, that desire to own a home hasn't gone away, just the ability for a lot of folks. Yes, we have really high mortgage rates, but it's important not to lose sight of the fact that we also have low inventory. When those mortgage rates do eventually come back down, I foresee the housing market being a complete madhouse, just like it was in 2020, and people are going to be wondering where this low inventory came from. Now let's take a look at the national median home price. One thing that I found to be acting completely contrary in all of this data to how you'd expect it to be acting are median home prices. They don't seem to be going anywhere at all. National median home prices in September were $412,000, which is actually up 2% on a year-over-year basis. Obviously, that's not as much as inflation, so it's probably a net loss, but it's interesting to see that home prices are actually up, even in a market with such low buyer demand. It just goes to show real estate is a remarkably resilient investment. It's also one of the best inflation hedges out there. Now let's summarize that entire national picture. We are currently sat at 28 consecutive months of year-over-year sales declines. And it's really early to know for sure, 2 months doesn't make a trend, but we are beginning to see those declines level out slightly. This is really one factor to watch in my view. Are we going to start seeing home sales pick up now that the Fed has signaled its reluctance to increase rates anymore? Mortgage rates broke through the 8% barrier, but then rapidly declined to the mid 7% range. So is there a pathway now to lower mortgage rates? Well, there has to be. Mortgage rates now are only going to move either across or down because the Fed isn't increasing its interest rates anymore. So if mortgage rates don't move, then at least we know the playing field that we're playing on. And if they do come down, then every 0.5% that mortgage rates drop are going to bring buyers into the market. I've said it before in this video, but I'll say it again. I'm cautiously optimistic for the future of real estate in the next year or 18 months. Home prices aren't going anywhere either. So as those mortgage rates do eventually come back down, those home prices are going to shore up and are eventually going to take off again. So if you're a buyer in this market, you might want to ask yourself this question. What's more inconvenient, having to refinance in the really near future, or spending every single weekend and evening trying to find a home when mortgage rates come back down? I worked with buyers in 2020 for months. We made multiple offers on several different properties, and eventually, maybe on the 12th property, they connected with a contract. Right now, if you can afford the property that you're looking at on Zillow, you can buy it. That's not always going to be the case. If you're a seller, then know that it's a difficult market to operate in right now. We might be at or close to the crest of the hill, but we're not all the way down yet in terms of it being a buyer's or a seller's market. So you might find yourself with a home that's been on the market for several weeks, it's presented really well, you think it's priced really well, but it's not selling. And you're going to be asking yourself, what are you doing wrong? The truth is, you're likely not doing anything wrong. The market is just very unfavorable for sellers right now. Having said that, constantly be revisiting your pricing. Just because home prices aren't coming down, it doesn't mean that you listed ahead of where you should have been. Now let's take a look at the Coeur d'Alene market here locally and see how it compares to the rest of the nation. Actual sales were down 14.8% on a year-over-year basis, which is a little worse than the rest of the nation's decrease of 11%, but it's not really that far away. Median home prices are up a modest 0.95% on a year-over-year basis to $530,000. So if you bought a home recently and you're concerned that you bought a depreciating asset, well, that asset is holding its value as of right now. Inventory is sat at 1,957 units, which is up 2.5% from this time last year. So while your home may not have lost value, there are a lot of people trying to sell right now, so don't expect a quick sale in today's market, unfortunately. We can also see that absorption rates, also known as months of supply, is receding slightly. We're now at 5.4 months worth of supply. The Coeur d'Alene market is towards the top end of what we'd consider a balanced market. For reference, a balanced market is between 4 to 6 months worth of supply. So just keep that in mind if you're casually thinking about selling, you're gonna have a pretty challenging time right now. Days on market in the Coeur d'Alene area are beginning to increase again. We're now at an average of 96.5 days on market. If you're a buyer, it really does feel like there's opportunity out there. Not everyone is going to want to hold on 96.5 days to get top dollar for their home. They might be open to a reasonable offer in the meantime. There was a time not long ago where Coeur d'Alene was considered in national newspapers one of the top 5 hottest real estate markets in the entire country. If mortgage rates come back down, do you think that's possible again? If you're a seller, then everything I said previously when I was summarizing the national market about what sellers should consider apply here too. One thing I would say on top of that though, is that inventory here in the Coeur d'Alene area is significantly more than the rest of the nation. So just expect more of everything. More waiting, more buyers coming through the house, umming and ahhing, not coming up with the concrete answer on whether they're interested or not. You're in it for the long haul as a Coeur d'Alene area home seller, but it's not impossible. That's it for this video. I hope you gained from the video. If you did, please like or subscribe. That really does help me out. If you are looking up buying or selling in the Coeur d'Alene area, then please reach out to me. Give me a call, shoot me a text, send me an email, and I'd be honored to work with you. Until the next video, my name is Phil Wells, and thank you for watching.